So I'm going to take us to our first cash flow template. The only point I want to make here is, just like your bank statement, your opening balance for the 1st of April was your closing balance for the 30th of March. So there is a link between the closing balance of a month and the opening balance of the next. So the opening balance is always equal to the closing balance of the previous month. And this is where, in a cash flow forecast, the whole thing links together. It links together in one long snake, if you like, of each month affecting the other. So if there's a change in month 2, that's going to affect month 3 and beyond, because it's all linked, and that's what the beauty of this cash flow forecast is, that when we make changes, we can see how that affects out to 13 weeks. So I'm going to try and share this, and I hope this works. I'm going to try and share that. Petra, is that a Excel spreadsheet you're seeing?
Yes.
Okay, good. All right, so this is our first just look at what a cash flow forecast looks like. And it sort of looks like this. It sort of looks like, on the left-hand side, you've got a lot of the things that we talked about before, about the opening balance, the cash in, the cash out, and the closing balance. You will see an assumptions, and with cash flow forecast, you should always build in that assumption, which is something of sales or something per month, because by just changing that assumption, you change the whole model. And I'll try and show you how that works today. So because you want to know what your assumptions are based on, because you might want to go and change those assumptions as you go along. And then you'll see the 3 months there. So this is a scenario down here. So sorry, I'll just try and line that up for you. We've got $4,000 in the bank now. We've got expected cash sales coming in, but we know that they're going to continue to track down. We've got account collections, and they're probably slowing up. We're not getting all of those. We've got purchases, overheads, staff payments, and drawings. But what we also have is, we know that in 3 months' time, we're going to have a GST bill of $12,900. And the question is, with all of that information that you know, can I pay my $12,900 in 3 months' time when it falls due? And this is something that would bother you for 3 months. So what we want to try and do with this cash flow forecast is put that to bed. In other words, that to say, either we can or we can't. If we can, then let's get back to worrying about the productive things in our business. If it can't, then let's come up with a strategy in order to see that we can do that. So that's the perfect thing for a cash flow to do, is to just relieve you of that. Will I have enough money to survive for the next 6 months, 3 months, 13 weeks, whatever it is? Will I have enough money to survive that? So we're going to take these numbers and we're going to plug them into the template that I've already created, and we'll see how it works. So the first thing you type in is your opening balance. So in month 1, our opening balance is sorry, I have to turn my number lock on, 4,000. Okay, so remember before we said we have to create that formula. I won't do it yet. I'll copy a few more things in first. So then we can take these cash sales. So we've got cash sales and accounts collected. So we can just, those of you that know, you can just copy that. There's lots of ways to copy it. And then you can paste it, and there's lots of ways to paste it. I'm just going to go Control V. And so there's my cash in coming in. So then I might do this now. I might go and create this form. No, I won't. Sorry. Yes, I will. I'll create a formula. So we're missing the closing balance there. And if we remember, that formula is equals to, so all formulas in Excel must start with an equals. It equals, remember we said it was the opening balance. So I just click on that, go with the plus button, add the cash in, and then take away the total cash out, which will be that figure when we get to it. And that then gives us, so we've got 67,000 because we haven't got our money coming out yet. But you can see that that's now 67,000 closing balance. Here is the opening balance there. And one of those things I said to you was that series builder. I could then now go along and do that exact formula there, and I could do that exact formula there. What a series builder does in Excel is when I select that cell, if I go to the bottom right-hand corner, the cursor changes into a solid black cross. When it's in that mode and I hold the left button down, I can drag that across. And what that does is it changes this formula. It just brings across that same concept and applies it to the other columns. So that's a series builder, and maybe you're familiar with that and good, but it's a real productivity enhancer. It just makes creating things like a cash flow forecast so much easier when you can do that sort of thing. All right, we're going to plug in a few more things now. So we're going to plug in that our purchases is 55% of sales. So this is obviously a business that buys and sells things. It might be a warehouse business, a cafe, might be a bookstore. So we're going to put in 55%, which is 0.55. And you can see that the purchases, if we're going to sell $40,000, we're going to need $22,000 worth of purchases, because we know that that's our the cost of the purchases for our sales. Let's go into overhead. So we said our overheads was 10,200. We said, and that gets carried across. We get our wages at 11,500, and we get 6,000 a month in drawings. Now I've previously set these values up so that they're all looking at that value there. So if I double click here, you can see that it's looking or connected to that 55%. So that's why it's able to, this one here, it's connected to there. So, and you'll notice how I've got it to connect there is there's a dollar in front of the B and a dollar in front of the 9. You can actually push the function 4 on your keyboard. You know those things at the top of your keyboard that you always wondered what they did. When you select something, and if you type F4, it actually creates what they call an absolute reference. So I won't cover that in full. What I'm going to be doing once I get through this week, I think, by next week, by the end of next week, I will have some videos out that will show you how to do all of this stuff. And so I will explain the purpose and the way in which you create an absolute a reference and why it's important. So I'll be going through that. What's important in the feedback, when you give us the feedback towards the end of today, if you make sure we've got your email address, everyone with an email address will get both the frequently asked questions that are asked at our webinars, and you'll also get not only the questions, you'll get the answers, but you'll also get these videos that we're going to produce to help you to understand how to build one of these. Oops. Yep, sure. Okay, so that was so then we've got our cash flow forecast, but then we said now we've got this 12,900 that's due in month 3. So when we type that in, 12,900, we can see that at the bottom line here, which is the closing balance, that we've actually still got money to pay it. So when we threw all those numbers at me, I was able to put it in this form, and I could say, yes, if those numbers hold up, you are going to have enough money in month 3 to pay that 12,900. And the point of that is it's meant to give us a certain peace of mind. I'll just do a couple of other things now. So you can see in this overheads, I've actually just made that so much per month, but overheads, as you guys know, are different for every month. They're not just an average. Some months you're paying a lot more than other months. The electricity is a 3-month thing, so you only really pay that on the 3rd month. You don't pay it every month. So what we do with that is that we create another tab. And so you see cash flow here down the bottom. I created another tab called overheads, where I took that $10,200 and broke it up so that it actually represents what actually does happen in each month. And this is where I said you can use a cash flow forecast at a very high summary level, or you can really start to break it down into item by item, and then your ability to predict the future becomes so much more enhanced. So I want to sum this now. And there's some of you who use the sum button will use it in different ways. The way I like to do it is I select the data I want to sum, and then I just add an extra space where I want to put the result. And on the home tab of your Excel, there is a thing up here which is called sum. And that automatically sums that for me. And like I say, I could go and do the same thing again here if I wanted to, or I can do what I said before, is create a series builder. So bottom right hand corner, drag that across, and that will now create a sum for every one of those columns. So why we use that series builder is because you can do things in a very, very fast way. What would take you a minute is now taking you 2 seconds. So that's why we did it. So back to our cash flow, we've got, at the moment, we've got our cash flow as just an average, but I want to convert that, and don't want it to be an average. I actually want it to be, I've now broken down overheads to a specific month, but I need to bring that value across, or I need to link it somehow. So this is what they call linking multiple worksheets, and it's not that difficult to do. It's simply this. You're going to go with equals. This cell here equals, go to my overheads, it equals this value here. So I just said equals overheads, I didn't even type this in, I just clicked it, and then that comes across and it says, so what was before 10,200 is now 12,500 because that's what's over here. And again, I can use that series builder and I can drag that across, and that will now make that value all the way across. So we still got the same result, but now I've actually broken down that overheads to exactly what it is, rather than just apply an average, which you can do in your first cash flow if you wanted to just get a ballpark figure of what's going on. But as you become more competent with a cash flow forecast, you do start to break down each of those lines into other detailed worksheets, and then that's how you link them back. So you do all your detailed work in the smalls and the other tabs, and when you're done, then you link them all back to your summary, and then your summary tells you whether you can pay your bills or not. And then the other thing is, and I'll show you that at this point here, which is how we can update that, because one of the important things with cash flow is not that you build one, but that you maintain it. So I want to be able to create a month 4 now. And I want to get rid of month 1 because I've already finished month 1. I've finished month 1. Things went beautifully to plan, and I've actually got 9,430 in the bank here. So I finished month 1. I can forget about that now, because now I'm in a whole new period with a whole new starting amount. And now I want to do what they call a perpetual cash flow. So I want to add another month on. So that's, again, that's as simple as selecting that whole creation that I've done there, and we can just drag that across. So using that series builder again, you can see we've gone into negative, and that's because we don't have to pay the GST again then. So we can get rid of that. Yeah. So we can see that, oh, and I did say down here though, that our sales were going to drop down to 35,000 and our collections were only going to go to 11,000. So this now is 35,000 and 11,000. But even with that continued drop, I'm still going to have a skinny 1,930 at the end. But the important thing to understand there was how I created another month. And it's using that series builder where you take the entire month or column from last month, and with the bottom right hand corner you can drag that across. And if you've set your formulas up properly using absolute reference and all of that sort of stuff, multiple sheet linking, then you'll find that month 4 comes on perfectly. So now I want to get rid of month 1 because it's finished now. I know cash flow forecast is about from now forward. It's not about the past. That's what accountants do. They record your past. What a cash flow forecast does is try to predict the future. So I want to just delete this month now, and that's simply all you do. What you've got to first remember is, what am I starting with? I'm starting with 9,430. So I'm just going to delete that. But I have to change my opening balance to 9,430. And here's that's how I've updated. I've added a month and got rid of a month. And that's how you make a cash flow perpetual. So you can you can do this with weeks and that if you wanted to.